Thank you for joining me. I'm Alexandra, and I want to talk about 3M today. So, 3M is a dividend aristocrat just because we're on the topic. Since yesterday I covered PBCT, which I'm still not sure what it stands for, but actually, pretty good choice for pretty much anyone. So, 3M makes a lot of stuff, a lot of different stuff like adhesives, masks, many other things. Stock price is $180.94, which gives them a market cap of $105 billion. Revenue $32.2 billion, which is ever so slightly up. Earnings $5.4 billion, which is up pretty big, actually. And it's in line with 2 years ago. And it's actually the highest in the past 4 years, so progress, I guess. PE is 19, forward PE is also 19. The latter is slightly lower than the former, but doesn't really make a difference. Dividend yield 3.27% with a payout ratio of 64%, so obviously not terrible. PBCT yesterday being a bank, the PE ratio in the range of 12-ish, which is not that common for other companies, especially 3M. So actually pretty decent dividend yield, pretty decent payout ratio. I could live with that. Total assets $47 billion, total liabilities $34 billion, which gives them a total stockholders equity of $12.9 billion. And that being up $3 billion, obviously a very good thing. You would have thought that the revenue would increase much more since, I mean, a small portion, but still a portion of their income is from the N95 masks, which the whole world wants right now for reasons. So risk factors, I don't really think there are any risk factors because 3M is just so diversified that there will not be a single company that will just take their market share. It would have to be like 50 companies. So really don't think there are any risk factors. Really don't think that the revenue or earnings are going to be hugely declining anytime soon. So in my opinion, it's a very stable company that's going to do business on the same scale for a long time to come. On the other side is obviously there's not going to be huge growth. So with that, obviously growth investors are just going to be out because there's not going to be huge revenue growth. Dividend investors, I think, will find this company very interesting and should definitely look into this, not only because they've increased their dividend for 25 years now, but also because dividend yield is nice, payout ratio is nice, the balance sheet is okay-ish, and the company is very stable, besides the fact that the PE is decent. For a value investor, pretty much the same thing holds true. The PE is decent. The balance sheet is okay. It's not great, but it's okay. And the company is very stable. So if you're looking for a reasonably safe investment that pays you 3% dividend, which in terms of bond yields of way below 1% is going to be pretty decent. So overall, pretty interesting company to look into. Obviously, as always, do your own research, but do your research because it looks interesting. That's it for me for today. If you like this video, make sure to subscribe and comment with more videos every day before market open. I hope you have a successful day.